This is the best piece of advice I've ever heard about investing. It came from a millionaire I looked up to as a kid. After overhearing him talk about investing, I wanted to get involved. But as a complete beginner, I didn't know where to start. So I asked him, how'd I pick the right stocks to invest in? His answer was very simple. Treat it like finding a girlfriend. This is quite a clever way to look at it. Because when you buy a share in a company, you actually become a part owner. This is like a partnership between you and the company, and just like a relationship, you want to make sure it's happy, long, and successful. But look, I'm not gonna pretend that there's a crystal ball that can tell you when to buy a stock before it rockets in value like most of the fake gurus online. However, there are certainly a few things you can do to tip the odds in your favor. Strategy. Light upbeat music. When you're looking for a partner, you need to have a strategy in mind. Are you gonna shower them with gifts like a simp or treat them mean to keep them keen? You'll get very different results depending on which strategy you choose, and the same goes for stocks. So just like dating, you need to figure out how you're gonna approach the stock market so that you get the results you want. There are two strategies you can choose from, the technical or the fundamental approach. Both of these options are very different, so let's quickly go over what they involve. Technical analysis is mainly for short-term day traders. They use charts and price action to identify patterns that supposedly help them predict if a stock is going to go up or down in the short term. I use the word supposedly because in my opinion most of the people using this strategy are glorified gamblers. Is it possible that they trade successfully? Yes, but more than 95% of day traders lose money rather than making it, according to the Motley Fool. Fundamental analysis is like being a detective for a company. You look at everything, from their financial reports to how well known the brand is and who's running the show. All these pieces of information help you understand how the company is doing now and how it might perform in the future. This approach can help you pick a range of stocks that can make you a nice amount of money over a 3 to 10 year period. I know saying this will probably ruin my watch time, but I only want people getting into this for the right reasons. So if you're looking for a way to get rich quick, then stop watching my video now. My goal is to secure your financial future, not just help you make a quick buck. Also remember, with any kind of investing, your money can go down as well as up. If you're still with me, then comment down below, I'm in, so I know how many of you are willing to invest for the long term. Right, all done? Cool. Let's jump into balance sheet. Light upbeat music. When you're on a dating app and checking out someone's profile, you usually look at their pictures and read their bio to see if they'd make a good match. It's exactly the same when you're thinking about investing in a company. You have to check out the company's profile, which in this case is something called a balance sheet. A balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. It details the company's assets, liabilities, and shareholders' equity. Don't worry if that sounds a bit confusing. We'll take a look at one together and I'll break it down with you. I'm gonna be using Trading 212 to do this, which is a great place to research and buy stocks. You're welcome to download it and follow along. Trading 212 is also sponsoring this portion of the video, and if you use the code Tilbury you'll also get a free fractional share worth up to £100 when you open your account. I'll put the link in the description.